Welcome back, everyone, to the Bitcoin Business Bureau. I'm your host, as always, LitecoinLeader. Took the weekend off of a few days, which is light years, it seems, right now in the markets. We got the news over the weekend that Credit Suisse is now buying out UBS, and that's pretty much the main story I want to talk about. I'll mention Signature Bank because I want to tie it back to crypto. The first three banks that everybody are talking about, you got Silvergate, you got Signature, and you've got Silvergate. So Silvergate, Silicon Valley Bank, that's the big one that everybody's talking about, is Signature. Silvergate and Signature were big crypto banks. Signature, we're still questioning why we even closed. It seems that there was a target over them because of their activity in New York. They didn't become insolvent, but now we have a fourth major bank that's having an issue. We have not even mentioning Federal Republic, but there are more and more banks. I think there was a report that came out. Over 100 banks now have some form of concern. A lot of people being pushed out of regional banks and into larger banks, and that is a recipe. If everybody winds up being in a top 10 bank in the United States, then those top 10 banks easily flip on the switch to go to CBDCs in a matter of weeks, if not days. So that could be what's going on. One of them could go insolvent. I want to go back. Let's talk about the UBS bailout, Credit Suisse. Let's talk about 2008 and framing that up. So let me share my screen real quickly. This is the Credit Suisse deal. Number of stories out there. You've got some from Wall Street and Zero Hedge. They've got this one. You've got more from Wall Street and Yahoo Finance. This is about, and then we're talking more with the Credit Suisse here as they're trying to calm down the banks. But the main one I grabbed here was from this. It might be from the Reuters. I'm not sure. Let's see, RTE. But it basically says it aggregated all the bailout costs, and it's not just a couple $1 billion. It's 160 billion francs, or 173 billion dollars in loans and guarantees that the Swiss government is now backing Credit Suisse with, and they structured this deal with UBS. UBS didn't really want to buy its rival because they could have gotten them probably for much cheaper. But Switzerland, the government basically interceded and said, hey, if you guys don't bail these guys out and buy them out, then the whole Swiss economy can implode. And that's bad luck for everybody. So the government's pledging a lot of banks, a lot of backstopping, because when UBS is buying Credit Suisse, they don't have time to do their due diligence to dig into all the details. So when you're buying somebody, you want to look at all their financials. You have your accountants go through everything, get a good valuation and everything. It can't happen overnight unless somebody says, whatever you find, we'll back it up to a point. So that's what the Swiss government has done. So they're reporting like the $3.2 billion is the number that UBS will pay to assume the losses of Credit Suisse and to buy out their stock shares. We're not even mentioning the much bigger number of all the stopgaps and the backing that the government is pledging to keep UBS solvent. So there's a lot going on here. As I said, I was going to mention Credit Suisse, and sorry, I'm way down the corner there, but you know, normally I'm there. But hey, let me drop out of here and just talk to you guys for a minute. You guys have all seen the stories. It's not hard to find a story about Credit Suisse and UBS right now, but do not believe that $3.2 billion number. That's what I wanted to point out first. The banks are having issues. This is a major, major bank. Credit Suisse is a large bank in Europe, possibly the world. It's a big guy. Okay. There's a big banking sector, and they had trouble, and they got into the category of too big to fail. And that's what Janet Yellen was talking to Congress about, is that there's some banks that are just too big to fail. And it's an example of what's happened with this financial system. It's evidence that these guys have gotten too big to fail, that it's structured poorly. The fact that they've got these companies to get the number 2 and the number 1 merging in France, typically that's frowned upon because of monopoly reasons. But now people are going to call this, they're going to say it's somewhat reminiscent of 2 events in 2008. But to unpack 2008, for those you don't remember or didn't experience it, in March of 2008, Bear Stearns went down, and JP Morgan jumped in and bought them for pennies on the dollar. 6 months later, Lehman Brothers went belly up, and even though the Treasury and the Fed were all pushing everybody, and all the government was in the U.S. was pushing these banks to merge, figure this out, bail out each other. If you haven't seen the movie Too Big to Fail, it's very worth watching and checking that out. It's a good portrayal of what happened. All these companies that were basically forced to merge to save the financial system because the Treasury wanted to save some face. They couldn't bail them all out. So Lehman Brothers was allowed to go under. Bear Stearns was bought pennies on the dollar. I think Chase merger with JP Morgan. There were a couple others. Wachovia was involved. There's a lot of mergers and acquisitions going on in 2008, not because the banks really wanted to do it, but they had to do it to keep the whole system together. Fast forward now to 15 years later, and we've got another situation where we've had what the Fed was doing the last couple of years of raising interest rates really fast, which really put a lot of strain on the banks that had to buy Treasury bills a couple of years later because they didn't know where else to put their cash. So now you've got these banks with these toxic assets, and now the Federal Reserve or the Treasury, one of the two, they're basically synonymous to me because they just hand stuff back and forth. But now they have the new backstop program where they're valuing all Treasury bills at par. And what that means is that if your bond lost face value in a bank, you may have trouble looking to your creditors like you have enough assets to cover your liabilities because your assets went down in value. So now here comes the federal government saying, hey, wait a minute, we will give you a gap loan or a bridge loan to say, like, if your bonds should be $100 million, but they say 90 on paper, we'll loan you $10 million for the next year, and then we'll figure it out then. That's where we're at with the banking system. They're kicking the can down the road yet another year by keeping these banks as solvent as possible, basically to get to the point where, one, they can't save one, or they're ready to launch the CBDCs and introduce those, which goes back to my original point, which I made on EconomicPreppers. If you haven't seen that, go check it out up here. But on EconomicPreppers, I made a point that I think that came out Friday, but the last episode that we just did, these banks, they targeted Signature. Signature never went insolvent. Signature had a perception problem because they were heavy into crypto and they were big in New York, a very legislated anti-crypto state. So when they see a Signature, they're even like, I think it was Nick Carter who put out the tweet that said that for anyone that's bidding on Signature right now, you have to say that you're going to divest or sell off the crypto assets. That's how toxic they're viewed in New York. They don't want this bank or any other bank getting into crypto. So they're trying to cut off the on and off ramps for crypto right now as part of this mergers and acquisitions and financial restructuring of the current economic system, which is not an economic system. It's a financial system. And a true economy just builds itself. But this has been manipulated so much that it's now a financial system on the brink of collapse. So what are your thoughts? I read every comment. Looking forward to them. Please like, share, and subscribe. I know I need to say that sooner. Please hit the notification bell. But I'd love to read your thoughts. What do you think about all these mergers and acquisitions? Are we ripe for another one? How's this going to ripple into crypto? What do you think? So let me read those comments. Like, share, subscribe. Really appreciate it. But for now, I'm going to close the door on the bureau. Say follow leader. I will talk to you soon. Take care.